Thanks so much. You could stay on. I am Pius Kojobaka, looking at our stories. Chief Revenue Officer of the Ghana Revenue Authority, Victor Yao Akogo, has urged businesses to comply with the government's modified taxation model aimed at broadening the tax net and ensuring compliance. He emphasized the need for businesses to register under the new model and desist from concealing taxes from the government. According to him, arrangements have been made to extend the initiative to individuals in deprived communities as well. His comments follow GRA's rollout of the modified taxation model to formalize micro and small businesses.
By law, you are not supposed to even operate your business without registering with the Ghana Revenue Authority. So this time, GRA is coming to you in a more polite and friendly manner. Yours is to make your Ghana card available, register. If you don't register, then it means that you are trying to evade tax. You are trying to conceal income from government. Because we have made this modified taxation scheme a simplified, flexible, convenient, and easy way, the taxpayer needs only his Ghana card, his telephone number, and also the GPS location. He also needs to tell us the turnover, the sales that he makes at the end of every day. Then we will calculate the number of days that he opens up his shop, then multiply the revenue he makes a day by the number of days that he opens. If he makes a sales 200 Ghana cedis a day, then he opens up his shop for 6 days, 200 times 6 days times the number of weeks that he opens up the shop, then times the number of months, then we establish his annual turnover. Then out of that, 3% is paid as a flat tax for the whole year. This scheme is going to provide a flexible platform where we're going to make available mobile apps and modified taxation scheme systems available to those taxpayers in the hinterland, in the rural.
All right, so let's expand this conversation much better and get onto Zoom and speak with tax consultant Francis Timoboy to help us understand this more better again. Francis, I truly appreciate the time speaking to me here on Business Live. First off, help us understand which kind of businesses will be affected by these modified taxation being rolled out by the GRA today.
You can call it a simplified form of assessing the income of individuals, especially those who are in business. I'm talking about businessmen. Generally, these people are in control of everything. They are the accountant, they are the lawyers, they know how much they make. And one key thing that they lack is record keeping. So if you subject them to the traditional tax assessment where you need to target the profit, the taxable profit. So you take the revenue and then you deduct all expenses like salaries, electricity bill. If the person has taken some loan, you take it out. Those people cannot do that. They don't normally keep records of that. So this mode of assessment, which we call the simplified or modified taxation, is some sort of modifying the existing rules so that it can suit or make it more simplified for individuals who are in business. So generally, it is targeted at businessmen, but the law, it was passed in 2015. If you look at the second schedule, it also says that even though it is targeted at individual businessmen, there are some people who are excluded. So, for example, an individual who is a professional, you have a professional qualification. Maybe you're a lawyer, you're an accountant. The presumption is that you can do the record. If you are engaged in businesses that are generally classified as high profit, you are also excluded. And then if you have more than one business unit or one business outlet, some people are doing spare parts, others are doing, barber shop. Those people are also excluded from it. And if you're an individual and you are in partnership, you are also excluded. If you have more than one business outlet, the law also excludes you from it. It is a way of trying to broaden the tax base so that at least everybody pays some small share of how much they make. And again, let me emphasize that it is limited to business income. It doesn't cover investment or employment, purely for businessmen.
All right. So the big question here is that we want to understand how efficient and simple this modified taxation for small and medium businesses is really.
So because we presume that they don't have the capacity to keep proper books of accounts, we apply a small rate of 3% instead of the traditional 25%, or if you are an individual, we apply the graduated rate. Currently, the maximum rate for individuals is 35%. So we will ignore all those rates that are used for the standard tax assessment. And then we come after your turnover or your revenue, how much sales you make. And then we apply 3%. That 3% is presumed to be your taxable profit, and therefore if you pay that one for the year, then you are okay. You don't owe the government anymore. And the threshold is that you should have a turnover of 20,000 Ghana cedis, between 20,000 and 500,000 Ghana cedis. Then you qualify to be registered or rolled onto this particular scheme. And for me, I think that is simplified because if you look at the standard rules, it's quite complex and too many rules. I don't think that small businessmen who are not professionals can, keep up to that pace.
And it leads me into my next question, like you rightly put it. So do you think there is enough education or sensitization to enhance compliance, really?
No, that one, I think that we haven't done too much well. We passed this law in 2015. In 2021, there was amendment to it. And over the period, we haven't been able to educate the public, especially, let's not forget, these are, small businessmen, micro businessmen who do not have the capacity to employ professionals to work their books for them. So they really need the education in their local language to understand. They don't keep proper books of accounts. So we should have done better. But I think that now that the GRA has rolled it out, I am happy because for the past, how many years? 10 years, we haven't been able to roll it out. So it's better late than never. We just have to go on aggressive tax education, set up several, zones to help them. We really need to go to them and explain to them the benefits. And again, if they don't voluntarily comply, trust me, this thing will not bring in the revenue that we need. It's going to be dependent on a lot of voluntary compliance.
Voluntary compliance, you say, and of course that would mean that there has to be education on this very tax we're talking about. But looking at how things are going, do you think we can achieve compliance like we are hoping to achieve at the end of the day, looking at the low level of education and sensitization so far?
I think the good thing is that we have started. And so for me, for 2025, maybe the target may not be met. And again, we are even starting mid-year. So the big potential from as I see it, we are likely to realize it in 2026 and going forward. The Statistical Service did some survey and they said majority of our business we have in Ghana are informal. So it is good that for 10 years we have started it. In future, we are able to reap the benefits and the tax base will be widened. And if we do that, you realize the government will not even be too much concerned with the consumption taxes, which we see all over.
Maybe, Francis, you want to clarify this for me. Are you saying that the 2025 target would be achievable?
I doubt because, one, I haven't seen too much education. And looking at the time we are starting, remember the budget was passed in March. And the minister indicated that they're going to roll it out. So we are starting a bit late. And the targets may not be realized amidst the education that we have not done. For me, I think that we need to be more aggressive. And we may have to call on the Ministry of Finance to give more money and budget allocation to the GRA to do this education. If we do it, trust me, the future looks bright because you can have about 80% of your population or economy driven by informal sector, yet they don't contribute the fair share of their income tax. And here we are talking about income tax. We are not talking about consumption tax. So if we're able to lay the foundation, in future we'll be able to reap the benefits. It's a great potential, but for 10 years we haven't been able to roll it out. And for me, it's good that we are starting now.
All right, Francis. Thank you so much, Francis Timobo, for agreeing to speak to us here on Business Live. He is a tax consultant. I truly appreciate your time, sir. Now, let's shift focus to some other stories. Finance Minister Dr. Atuforsen has revealed that Ghana is close to reaching a debt restructuring deal with Chinese Commercial Creditors. This was after he concluded preliminary negotiations with lenders during a recent trip to China. George Yafe reports.
The Finance Minister, Dr. Atuforsen, disclosed this in a post on his X social media handle this morning. The trip, which began some 2 weeks ago, afforded the Finance Minister an opportunity to engage the Chinese Commercial Creditors, which included China's Finance Ministry, China's Exim Bank, as well as Ghana's key financial and contractor creditors. The Finance Minister in the post also described the engagement as progressive and is confident that Ghana is on the brink of what it describes as a new era of stability, resilience and inclusive growth. The minister also announced that the discussions represent what he describes as a significant step towards closing the chapter on restructuring the debts owed the Chinese commercial creditors. Ghana has managed to reach a deal on restructuring majority of the debt owed its creditors. However, the country is yet to close the chapter when it comes to the more than $2 billion debt due to be paid to the commercial creditors, the significant portion owed the Chinese commercial creditors. If this deal is finalized before the close of this year, it could also impact positively on the monies that government has set aside for the payment of the country's debt.
And we want to have a conversation at the back of this story. Joining us via phone is economist Dr. Edu Usakodie. Thank you so much, sir, for making time to speak to us here on Business Live. What would a successful completion of a debt restructuring with the Chinese commercial creditors mean to the economy?
Well, it will mean a lot. We all know the difficulties that the Ghanaian economy went through in 2022 and 2023. We had to resort to the IMF program, and the prior action was that we had to restructure our debt because our debt levels were unsustainable. We all know the story from the DDEP to the external debt restructuring. So it's also another step into bringing our debt to sustainable levels, not only the debt to GDP ratio, but also in terms of the interest to revenue ratio, or someone will call it the debt service to revenue ratio. So all these are indications of some relief for the Ghanaian economy. Of course, these negotiations were started by the previous administration and is being continued by this current administration. So kudos to both administrations for staying committed to whatever was started in 2023. So we have a debt relief where debt service to revenue ratio would also go down. It also means that if we cast our minds back to the HIPC time where we had some debt relief and the monies were used judiciously by President Kufuor to construct certain health and educational facilities across the country. So maybe the relief package will also give the government some opportunity or let's say some savings so that they can channel those extra savings into maybe infrastructure in health and education or whichever they deem fit to invest in. So it's good news for us, and I believe that the Ghanaian economy will benefit positively from this.
All right. When you hear the finance minister say Ghana is close to reaching a debt restructuring deal with the creditors, basically, do you get an indication, indeed, all things being equal, we should have a deal by the end of the year?
By the end of the year, I think we are about 6 months away. It's possible. It's possible, given the fact that the journey so far for the DDEP and then the Eurobond and the Paris Club. Yeah, so it's really, we are looking to this 100%. We may be more than quick and to get a good deal for us. So it also all depends on how we conduct ourselves. If you are looking for debt restructuring, and this commercial not difficult to conclude. So if you want to be from somebody to conduct work, so I like to say 2025 budget done, basically about consolidation, keeping things tight. There should not be any waste because then not see us as a serious country. So I want to commend and advocate that we should still continue to stay committed to whatever the budget. I'm sure if they're serious, they will be able to also meet us halfway and give us this due by the close of the year.
All right. Thank you so much, Dr. Edu Osisako, for your time speaking to me here on Business Live. You're still watching Business Live. We have more for you after this break.
For the payment of the
Hello again. Some oil marketing companies have indicated that petrol prices could be kept unchanged while diesel will go up at the pumps this week. Here's more.
Oil marketing companies should from today start reviewing their prices at the pumps in line with the adjustment every 2 weeks. The Chamber of Oil Marketing Companies at a news conference yesterday announced that petrol should go up by some 2% per litre, while diesel will witness about 5% hike per litre. But our engagement with some individual oil marketing companies, including some market leaders, showed that the price of petrol may not be touched, while diesel will go up marginally. Others have told Joy Business that they still want to monitor the market a little bit before they review their prices. So maybe don't expect any changes from today at the pumps, but rather in the coming days. If prices should go up this week as projected, it could be the first time since February this year that we are seeing prices go up at the pumps.
Former President of the Association of Ghana Industries, Dr. Kofi Klojesin, has called on government to ensure significant indigenous participation in the country's manufacturing and natural resource sectors in order to build a resilient economy. His call comes at a time where the country seeks to maximize its manufacturing and minerals potential through the implementation of a number of industry-centered policies. He spoke to Joy Business at the launch of the 14th AGI Awards.
The annual Industry and Quality Awards seek to recognize and celebrate excellence and innovation within Ghana's business community. The 14th edition will focus on improving standards to drive growth. Speaking on the sidelines of the launch of this year's awards, former president of the Association of Ghana Industries, Dr. Kofi Klojesin, called on government to prioritize local content as it aims to build its industrial sector.
One of the major things that I've been advocating ever since I was president of AGI is for government to be able to enact policy for equity for Ghana. You see, if you look at the gold board and all of them, it's an acquisition, buying and selling. But we don't have equity in it. If you look at today, we're listening to Sofia Akufo, the former Chief Justice, talking about Talo renegotiating contracts. And her argument is that why negotiate for contracts when they're taking it for granted? We need to be able to own and have equity in Ghana. That's the only thing that are left, as a positive trend in whatever government is doing. Because if you look at Burkina Faso, all the things that are going on, it's about ownership of agreement and terminating all agreement.
On her part, Nora Bannerman, the chairperson of the 14th Awards Planning Committee, believes that current global happenings could work to the country's benefit if government remains strategic.
Such challenges on the global arena causes buyers to then begin to seek alternatives. Because Asian countries, China for instance, they are under the greatest pressure. They have become the manufacturing country of the world. We all know this. And yet buyers are beginning to appreciate the fact that it is always good to have the alternative. And therefore, they continue to contact us here in Ghana. And this is why we also need stronger engagement with government so that we have a stronger public-private sector partnerships.
She further shared some insights on the awards.
Looking at businesses homegrown, even if they are foreign investors, it's still homegrown, able to withstand whatever global challenges, whatever local challenges, and still be on their feet as operating businesses, offering goods and services. That is a huge achievement for us to celebrate in this country.
The 14th Awards will be held under the theme, Accessing New Markets Through Improved Quality Standards to Drive Business Growth and Job Creation.
WeCom Agri Media and Consultancy has introduced Inspire by WeCom, is sponsored by New Age Agric Solutions Limited, to transform agricultural learning in Ghana by offering hands-on experiences and strategic capacity building for the youth, professionals and financial institutions, with the goal of strengthening agribusiness financing and boosting sector productivity. More in this report.
The Inspire initiative, sponsored by New Age Agric Solutions, aims to bridge the long-standing gap between commercial banks and agricultural value chain actors by fostering a better understanding of the sector's unique dynamics through capacity building and strategic engagement. Inspire seeks to enhance the ability of financial institutions to lend effectively and confidently to agribusinesses and smallholder farmers. Speaking at the session, Business Development Manager of New Age Agric Solutions, Asabre Bidiako, emphasized the transformative potential of the collaboration.
So, as an agri company, of course, one of the pillars that we rely on to ensure our growth is the bank. They more or less finance the whole projects that we do. But of course, if the person who is supposed to understand what you do is always sitting in the comfort of his office behind his laptop, they may not necessarily appreciate what is really going on. So GESA DBG decided to bring them to our site to take them through what the process is like. So what we've been doing today is that we have gone through the process that we go through to ensure that rice is processed. So right from when paddy is received, it goes through the process and the rice is milled. We also took the opportunity to take them to some of our production fields. They had the experience, and we also went to our fish production site.
The agricultural sector, which employs a significant portion of Ghana's population and contributes meaningfully to the country's GDP, is facing major challenges, including access to good roads. Chief Executive of Millennium Development Authority, Alex Mode, who taught the milling facility of AVV Foods, pledged government's commitment to addressing the problems facing the sector.
As you know, there's rice deficiency in the country, and we import majority of our rice. But if we promote local rice, if we encourage the farmers to farm local rice by making sure that we can de-risk the cost of doing farming in this country, then we will get the commercial banks to maybe invest in working capital for these farmers. So for New Age, for example, one of the most important things for us in the Inspire presentation is how do we get more paddy for them to mill in this area. Once we can ensure that we grow the farmers, we upskill the farmers, we give them capacity so that they can produce more rice. There has to be an off-taker like New Age to be able to mill their rice for them. So one of government's things, like I said, is to do infrastructure, which includes roads. As you can see, the road leading here, there are streams here, it's waterlogged here. And one of the things that we will work with the Ministry of Roads and Highways is to see how we can help our companies like New Age develop their roads so that the farmers, all the farmers here, will benefit from the roads.
The Inspire initiative is expected to empower banks to tailor their product to the specific needs of the sector, enabling farmers and agribusinesses access needed capital.
And that's our package by way of Business Life. I am Pius Kujubaka. Thanks so much for your time.